Hey guys, what's going on? Housing update, US, Nevada, the whole thing. I'm gonna have some notes here because, usually I just wing it. I just blast information. This time, let's see how this goes. I'm gonna try some notes for the first time in my whole life. So hey, what do supply and demand tell us about today's housing market? Hey, first of all, what the heck is supply and demand? A lot of people, realtors, business people, they're talking about supply and demand all the time. And I know that before I actually looked at what it was, I had no idea. I was like, dude, what is this? Right? So supply and demand, they go hand in hand with each other. If there are 3,000 homes on the market and there are 6,000 people who are buying homes, then all of those homes are either going to have multiple offers, or they're all going to sell, or the best ones are going to sell and the worst ones are going to be left behind. I hope that makes sense for everybody. So supply is the amount of inventory, the amount of property, houses, pencils, whatever is being sold or available for sale in the market. And the demand is, hey, how bad do people want this? Right? And demand can go up, demand can go down. If there's one person and there's 10,000 bottles of water, demand is down. Those bottles of water might not sell very quick, right? But if you're in the desert, there's 10 people in the desert and there's one bottle of water, how much would you pay for it? And that's the reason why the housing market has just said, boom, I'm gonna shoot up. Prices are up because what happened last year is that the interest rates went down way more than the housing prices went up. Now it's starting to kind of catch up and even out, right? But before, the interest rates just shot down. They're down 20%, 30%, and the house prices are the same. The house prices are up 10%. That means that it's a way better deal when the interest rates are down than it was before. Why? Because the prices, the monthly payment of the homes is rock bottom. So, for example, a $300,000 home a year and a half ago, 4% interest rate, payment, let's say it's $2,000 a month. Little high, but let's call it $2,000 a month, right? Now all of a sudden the interest rate goes down to 3%, 2.7%. And now the payment for that exact same home is $1,400, So you're getting way more home for way less payment. Or you can get a $400,000 home for less payment. That's why last year I was talking about, hey, if you have some equity in your home, might be a good idea. Just sell it, man. Sell it, rent it, sell it, take that equity, keep half, put half in your pocket for later, security, whatever you need. Take the other half and go upgrade, man. Go upgrade your home to a $400,000 home. You're in a $300,000 home now, go upgrade. Go upgrade. It's a free upgrade, right? So if you were watching me a year ago or 6 months ago even, you may have heard me say that. So hey, let's get to the point of the what I'm actually talking about today, the market update. What the heck is going on in the market right now? Why are house prices going up? Are they stabilizing? Are they not stabilizing? It's a question that a lot of people has. Does stabilizing mean that the housing prices, that the property values are going to go down soon? Is the crash coming? All these questions that people have. And I'm going to let you know today why a crash is not coming, why the stabilized market is actually the real market, and why it's a great time to buy, sell, or invest in real estate right now and for the next 3, potentially even 10 years. All right? So I'm going to talk about something real quick. While I was talking right now, I had a realization. Hey, if you go back to like 1900, 1950, whenever we started actually tracking the housing market, and hey, how much does this thing appreciate every year? In the 1950s, 1940s, 1930s, up until 2008, 2015, 2018, we were watching the prices go up a steady 3 to 5% every single year. No matter what, from 1930, since it started recording, since this price increase deal started recording, we were watching it go up 3 to 5% every year. And in And when in 2008, it was a little bit high. It was a little bit above that, right? 2005, 6, we were on par. And then 2008, we were like, dude, we're up here. We're going a little quick. And the housing prices took a big pop, right? Everybody remembers that. Even people that were 5 years old remember that. They're like, dude, something's happening right now. And I'm scared, right? So what's happening now is that the prices have been recovering since 2008, just going up just a little bit. 2010, they started twinkling up again, 2015 and 2016. If you're actually watching this graph that I'm talking about, what you would see is if the housing prices were going up the way that they should, then in 2016, the homes were undervalued. 2018, the homes were undervalued. 2019, undervalued. Right now, today, most of the economists, most of the people that look at history, look at the trends, they were saying, hey, one day, these things gotta take a quick pop because they gotta catch up with where they're supposed to be according to the industry trends. Now, nobody's talking about this. Nobody. Haven't seen it anywhere. But I'm talking about it. I've been investing since 2015, and once you get experience, not just read a bunch of books, but go out there, get some property for yourself, start watching the trends, what goes on in different areas, what's going on across the US, what's going on with these trends, these graphs that you see, you start to just notice things that maybe some other people may not notice. And what I noticed is that we were behind. That graph was behind, and a lot of people knew that. What I see now is that graph is catching up to where it's actually supposed to be if you're following the trend. And if you're a stock investor, you might know what I'm talking about with those trends. They usually end up catching up to where they're supposed to be. Sometimes they don't, sometimes they do. There's good news, bad news, things happen that aren't expected and we don't know what to do. But now things have caught up to where they're supposed to be. 3 to 5% appreciation since 2000 and since we started recording it, right? 3 to 5%. So we're on track for that again. So hey, I feel good about that. That's one reason why the prices aren't really high. They're actually on par for what they are supposed to be at. Hope that makes sense for everybody, and I hope that helps. Now, I talked about supply and demand. I'm going to talk about the economic stimulation. Economic stimulation. It's not like normal stimulation that you get at home, right? Economic stimulation. So there was money injected, printed throughout, since 2008, we've just been printing. Certain years there's 3 million printed, but last year there was $7 million printed in the United States. Now that just gets injected into the economy for free. And what that causes things to go up. That money starts circulating, not just in the US economy, but around the world. By the way, other countries are printing money as well. So when people are printing money, they're like, oh my gosh, I'm going to try to save the economy. I'm going to send out $7 trillion to the people that can't work. Well, that money starts circulating, goes into the Las Vegas casinos. People start going on trips. People start getting their bikes. And people, some people save it. And then they start buying properties, buying stocks, buying Bitcoin. And we see stimulation in the economy. So that's what's going on right now. We're looking at the economic stimulation. And the good news is that housing's not unaffordable. A lot of people will say that housing is unaffordable. And they're just saying that because they're either watching it on the news or that's what they think based on what they're looking at. Unfortunately, most people aren't actually looking at the right information, because if you are aware of what's going on 2 years ago and aware of what's going on right now, you would be able to take a look and say, hey, the interest rates were 4%, 4.2% last year in February, right? Maybe sometimes a little lower. 3.8. Let's call it 3.8 to 4.2% on average. All right, about a year and a half ago in February, right before COVID started. And because of that, the payment for that $300,000, $500,000, $1 million house was at a certain point. Let's call it $2,000 for a $300,000 home. All right, that's a little high. Let's just call it that. Now, right now, that home is probably worth somewhere around $400,000. And everyone's like, oh my God, Housing prices are high. But what people aren't noticing is, hey, the interest rates are 3%, 2.9%, 3.2%. So the payment is the same as it was a year and a half ago before COVID started as it is right now. And people are just thinking about the price. But what they're not realizing is, hey, where is this payment if you're actually financing this property? It's the same, man. It's the same. And if it's the same and the housing market was considered strong a year and a half ago in February before COVID started, and the housing market is strong right now, I mean, why wouldn't it be strong, right? The payments are the same. Housing's a little higher, but the payments are the same. People are buying cash. People are moving here from California. People are moving all over the place from California. As a matter of fact, 55% of the people who buy in Las Vegas, they're from California. They're from California, and they're not all buying cash. And they're not all ballers. And if you are buying a home or thinking about it, and you're like, dude, I have to wait, everybody's getting cash offers. I'm here to tell you right now, you don't need to wait. And by waiting, you could actually end up hurting yourself because you're probably going to be paying more in the future than you would right now. The reason that I say that is because all of the biggest banks and associations related to real estate right now are saying that housing appreciation, if you don't know what appreciation is, that's when you buy a home at $300,000 and then all of a sudden in 5 years it's worth $350,000. That's called appreciation. Housing prices will go up slowly over time. They always have. And that's what appreciation is, right? So appreciation, that's when we're watching these things appreciate right now. We're watching everything appreciate, right? And people are getting scared because of the appreciation. But if Fannie Mae, one of the biggest banks, Freddie Mac, one of the biggest banks that does loans for homes, and also NAR, the National Association of Realtors, national, meaning the whole country, all of these big companies that have way more information than I have, they're saying, hey, we're looking at a minimum of 5% increase in appreciation for housing next year. And some people are saying 8 to 9% appreciation. By the way, this number changes all the time. And usually it changes for the better. Okay, so keep this in mind when you're saying, oh my gosh, I'm going to wait for the economy to crash. I know people that have been waiting since 2012 for the economy to crash and nothing ever happened. Every single recession, except for the one in 2008, the Great Recession, every single recession since 2008, housing prices have either continued to go up, right? There's been 5 other ones besides 2008, including last year during COVID. Recession, right? They last for 6 months or less most of the time. And the normal recession, housing prices keep going up. They go up 1%, 2%, 3% in 6 months, right? There's only 2 recessions aside from the one in 2008 where housing prices went down. And you want to know how much they went down? They went down less than 2% in both of those recessions. All right. So if we're good to go up 5%, 8% in the next year, and then the year afterwards, for some reason, even though nothing is showing this, for some reason, housing prices go down 2%, are you still in a better position than if you bought right now or if you bought next year? Right? Same thing with 2 years ago. Were you thinking about, hey, maybe I should buy a home for me and my family, invest in real estate? Maybe you were thinking about this 2 years ago. I see everybody kicking themselves in the butt, and this is another one of those times when you'll be kicking yourself in the butt. You know, it's time. It's time to make something happen for you and your family. In my opinion, I'm making stuff happen. I am in the marketplace myself. I'm not just somebody who's like, hey, go buy a house. I'm in the game, and you can't win if you're not in the game. Does that make sense? You cannot win if you're not taking action, right? So, hey, jobs. Jobs were a little down during COVID. We heard about robots taking over jobs back in 2012, 13, 14, 15. And now all of a sudden, technology has created more jobs. There's more technology, Uber, Instagram, people making money, becoming millionaires in ways that we never thought of before. More jobs have been created. And if there's more jobs created, if there's more people making money, if there's more people making more money, do you think that they might end up buying property? Right? These headlines on the news, they're messing everybody up. They're getting in everybody's head, and people don't have the right information to actually make the best decisions. Because if you hear something 1,000 times, you're probably going to believe that. So you got to get the right information. The essential thing is the right information 1,000 times, not the wrong information 1,000 times, right? So hey, what else am I talking about? Talking about, hey, why are prices rising? I just talked about that. Demand is high. Supply is lower than demand is. That being said, there are more homes for sale, more properties for sale than there were 6, 7, 8 months ago. 6, 7, 8 months ago, 1,800 to 2,100 homes on the market in Las Vegas, single family homes. What the heck is a single family home? Single family home is a house. Anything between 1 and 4 units that is on a single piece of land is a single family home. All right? So anything that is above 4 units, 5 units, that's actually considered commercial. That is not a single family home. So we're talking 1,800 to 2,100 single family homes just back in February this year. And now we're at about today, as of today, we're at 3,781 homes. Now there's the same amount of demand for people buying, maybe more than there was before. The thing is now they have more options. So there was, six offers a few months ago for every single home that there was on the market. So let's say there's double the homes on the market and the same amount of people buying. Now there's 3 offers for every home. What's wrong with that? How is that a bad economy? How is the economy going to go bad when there's 3 offers for every single property on the market? Right? I don't think it can. What about the foreclosures? What about forbearance? What about all these things? Dude, there's not enough homes that could go on the market in a single day. By the way, you think the banks are going to put them on the market in a single day? No, they're not. They're going to release them slowly. Man, this is a lot of information that I'm sharing with you guys. Hope it helps you. Prices across the U.S. have risen 18.1% since this time last year. Where are the prices headed? We talked about that. They're going up, man. They're going up. All of the biggest companies, NAR, Fannie Mae, 5 to 8%. They're going up, man. They're going up. If you've been waiting, you could be in a worse position next year than you are this year. And last question right here. What does that mean for home buyers? I mean, I kind of already told you what it means, right? People who are buying homes. You might end up paying more. You probably will end up paying more. As a matter of fact, I'm confident that you will end up paying more by waiting. So hey, if you need to get qualified, by the way, reach out to me. Reach out to my office. You can type in the Dunson Group online. It will pop up. Call that phone number. Ashley will answer. She'll say, hey, it's a great day at Christopher Dunson's office. What can I get you information on? If she doesn't say that, make sure you let her know what she's supposed to say. And then me and you will get to talk after, and I'll be able to help you get from where you're at, figure out a plan, where you're at to where you're going. What's the gap? I want to help you. I want to help you figure out where you're at, where you want to go, and how you can do that. Maybe you're not ready right now. A lot of people aren't. A lot of people aren't ready right now, right? Maybe you're ready in 1 month, 3 months, 6 months, 5 years. It doesn't matter. Yeah, I mean, would you feel more confident if you had the right information, if you had a plan, 5-year plan, 1-year plan, 1-month plan, than if you didn't have that plan? Would you feel more confident if you had the right information? I know that I would. So, a lot of information here, guys. A lot of information. If you have any questions, I know that I would have questions if I was new to the market, if I was old to the market. I shared a lot of information here, a lot of high-level information. If any of it didn't make sense to you, if it did make sense to you, if you need more information, if you're like, hey, that might apply to my situation. If you're looking to sell your home for top dollar, right? You want top dollar. We have a marketing plan that makes sure as many people as possible see your home in the shortest amount of time. We want to help you maximize the amount of money you get for your home. And anybody buying a home, I'm sure you'd feel the same way if your home was on the market. Would you agree? Now, people who are buying, right now is not the market to be like, oh my gosh, I'm going to get a deal. Dude, getting the home is the deal. 2 months ago, the home that is $400,000, $500,000, $1 million today was probably worth 10% less money, maybe 15%. 2 months ago. The deal is getting the home in a rising market. Would you agree? I'm a master at that. That's why I invested. That's why I invest in real estate, is because I want to know how to get my offer accepted. And because I could do that for me, I could do that for you. Would you agree? If I can't do that for myself, how am I going to do that for you? How is another agent going to do that for you? If another agent only has one property, how can they do that for you? If they haven't done it multiple times for themselves. How can they know what you're talking about? How can they be empathetic for your situation if they haven't been in the position? How come they don't have multiple properties if they believe so much in their product? Right? So that being said, same thing with the investing market. How do you find a deal? Where are the deals at? How do you get your offer accepted? How do you make sure that you're making money? How can you feel confident? What's plan A? Is it possible to make a plan B? Are you doing Airbnb? Are you investing for the long term? Are you just holding the property? What's the smallest return that you want to get? These are all questions. What's the smallest return that you would be happy with? The minimum return. Do you want cash flow? Do you want equity? What's most important to you? Where do you want to be in 10 years? How can I help you get there? These are all questions that I want to talk with you about, whether you're buying a home, selling a home, or investing in real estate. These are all important questions. Again, hey, my name's Christopher Dunson. You can reach out to me. Type in the Dunson Group. You'll see the phone number right there. You can DM me on Instagram. I'm on Instagram. You can DM me on Facebook. I'm on Facebook. You can text me. You can text the number that's on there. You can text the number online. We want to connect with you. I want to connect with you. I want to help you get exactly where you want to go. So, hey, provided a ton of information today. If you have more questions, reach out. If you need more information, reach out. I want to help you. I want to help you, and I want to be your go-to source for everything real estate related. I want to not just be one of the options. My goal is to be the only option because I'm ethical. I want to create trust. I want to get you the results that you want. That's my goal. I want to help people, right? So, hey, hope you're having a great day. If you're not having a great day, turn it into a great day. Be great today. Whatever you need, I'm here to help. My name's Christopher Dunson. Be great.